Hey there, this is Shauna Cruz. So I'm happy that you're watching this because if you're watching this, it means you're serious about getting this payroll protection program loan/forgiveness situation rolling. This is geared towards anybody who is a sole proprietor, which means you receive 1099 wages, or you get money somehow, some way, some little something or other here, little something or other there, and you perhaps don't normally file a Schedule C form, but the Schedule C form is the key part that you need for filing for the PPP, because it's the only way that they can determine what you count basically as your payroll. So essentially we're going to do a profit and loss statement that's the typical one that would go with your taxes at the end of the year, or rather the beginning of the next year. So I'm going to just walk you through line by line because I think that it's going to be really valuable for particularly anybody if you're in any of the creative arts, hairdressers, estheticians, technology, musicians. I'm specifically gearing this towards the beauty industry because it's what I know and love. And I feel like this is something that we kind of struggle with, and there's never been opportunities like this for us before. I have an earlier video that's a little more inclusive, or a little more kind of all-encompassing on why I'm even bothering with all this, but I'm just super passionate about helping. So let me, I'm going to do a little screen share here. Jeez. Okay, so this is available at, it's at irs.gov. I will definitely include the links with this video. So, and this is like literally you just log in and then you get this whole, you can open it up and it's a fillable PDF form. So you just plug it in and print and you're done. This is the number, when you get to the bottom of this, this is what's going to tell you what you can file your PPP application requesting. So if you are any type of self-employed person, whether you have a Schedule C from before, I actually recommend, if you can, if you do have a Schedule C, if that's a normal thing for you when you do your taxes, if you're CPA or accountant or bookkeeper, whatever normally does it, then dig out your 2018 one, because it'll give you a really good idea of what you, kind of whether you're on track or not when you're filling this out. You know, if something is way out of whack, then obviously it's probably not right. But you're ultimately going to need all your list of all your income, and then all your expenses are your just like legit business expenses. And when we get to the bottom of this, you're going to see how this is not the year that you want to, you know, write off the dog bed because it was in your home office. Or, you know, the 8,000 runs to Costco for, you know, bags and bags and bags of toilet paper. Okay. So you want to go to that same website, just open it up. It's super easy, straightforward. It's going to be called a Schedule C Profit and Loss from Business. You can do this yourself. When you get to the end of it, that's going to help you, because this is what you're going to need to file with your PPP application. Obviously, make sure you've got the 2019 one. The name of the proprietor, that would be you. Principal, business, or profession. So whatever that is, you are a hairstylist, esthetician, musician, whatever that is. Social Security number, that's straightforward. The instructions here, basically this is going to be, you're going to look up, what's it called? It's called NC, you know what? I'm going to list the codes for you and I'll list the link. But this is basically the area that you're going to put the number that represents the industry that you work in. And it can easily be looked up online. I just need to double check what the actual, they have two different names for it and I gotta remember what they are. Business name, so if you did file like a DBA, so sometimes you are, you know, Shauna Cruz doing business as Hair by Shauna, or Shauna Cruz doing business as Cruz Your Profit. So that would be your business name. Then the business address, if you have one that's separate from your home, great. If not, so if you work in a salon, then put your salon name down or your address down. Otherwise, it can be your home address. Accounting method. So I can guarantee you it's going to be cash, but just so you understand, if you claim or if you record revenue and expenses as they occur, that's the cash method, which is exactly what you do. if you do accrual, you know you do accrual, because you would know what accrual was if you do it. So accrual is going to be a much more complicated situation, and that's not how it's going to go. So let's assume you're doing cash. So you would check the cash box. Yes, okay, so here, let me just actually do this. Okay, yes. Okay, don't laugh at my spelling, all right? You get the gist there. Okay, so accounting method though cash. Did you materially participate in the operation of this business during 2019? Obviously, if you were providing the service, whatever that was, then yes, you did materially participate. So the answer there is yes. If you started or acquired this business during 2019, so if you just started your side hustle or your full-time self-employment or whatever it was, then obviously check this box. Did you make any payments in 2019 that would require you to file a Form 1099? So if a lot of times if you're a rental hairstylist and if you are renting from an owner, if the owner of the salon is incorporated, then you would have given them a 1099, which means you would have told the IRS, hey dude, I paid this lady over here 10 grand last year. But you would know if you did that. So to keep it simple, because I can tell you it's not a common practice, not in our business anyway. So let's go ahead and click. Let's see, did you make any payments? No, okay. Here's the thing. The other thing you might do 1099 on is if you have an assistant, you might have filed a 1099 for your assistant. So if you paid someone as a 1099 contractor, if you paid anyone more than $600 in the year, then and they themselves are a sole proprietor or any kind of an independent contractor, then you would need to file a 1099 on them. The key part is you need to file those by January 31st of the following year. So if you had anyone who was 1099, you would have already done it. So you would know. So did you make any payments? So we're going to say no for the sake of this thing. If yes, did you or will you file required forms? So in this case, it doesn't apply. So the answer is no. Or actually, let's leave that blank. Okay, income. So this is definitely going to be anything that is, service related. If you are a 1099, if you work in a salon and you get paid as a 1099 and maybe you get retail commissions, that would get added here. Tips gets added here. Now keep in mind, the higher you make, the higher this number is, so the more you claim. I know a lot of us get cash tips and don't always claim all that, and I totally get it. So you're gonna have to weigh the pros and the cons of if you have a higher Schedule C, it qualifies you, if you have a more accurate Schedule C that actually really truly does reflect what you make, then you're going to get more money with the PPP, but you're also going to pay taxes. So you need to be thinking about that. For us, I know that the whole thing is always like, oh, how do I get that number as low as possible? How do I get that number as low as possible? And then for some reason, it doesn't, it's of low importance that we claim any level of income. And so then, you turn around and you try and buy a car, or heaven forbid, you try and buy a house. Anybody who's been through getting a loan, like a serious loan, knows that they have to watch that you don't just, whittle your income down to nothing. I can remember my first year of being a self-employed hairdresser. I went to my CPA that year, and I think I ended up with like $2,500 worth of income. And he gave me a real quick lecture on, you maybe should pick another career because it doesn't seem like you're making enough money to survive. So needless to say, that was 30 years ago, something like that. Okay, so this is going to be absolutely everything that makes up your gross revenue. Service dollars, retail sales, retail commissions, tips, all of that's going to go right here. Let's see, Form W-2 in the statutory employee box, that's not going to be the case for you because you are not an employee of any way, shape, or form, whether statutory or otherwise. Returns and allowances, that's if for some reason you had to refund someone money or returns on products, that's going to go here. Then you're going to subtract. So I don't know if I want to, so if you do, let's say, can't see how many zeros that is, 0, Okay, so let's say your top line revenue is 100,000. Returns and allowances, you're not going to have much of that. I'm going to say 200 here. Okay, so then subtract line 1 from line 2, which will give you, oh gosh, 99800. Did I get that right? Okay, take 3 or 4. Okay, so when you get to line 4, you need to figure out your cost of goods sold. You're going to come down to the second page and you're going to find this little worksheet area. And in this little worksheet area, you are going to go ahead and you're going to put in, if you had an assistant, that's going to go on line 37. If you all the back bar that you purchased is going to go here. Purchases less cost of items withdrawn for personal use. So any purchases that you made for retail products that you're ultimately going to sell, that's going to go here. So your total bills to Armstrong McCall, Bumble and Bumble, Aveda, whatever that is, that's going to go on line 36. And obviously you're supposed to take out what you used for your own personal consumption, if you've been tracking that. So that's line 36, line 37, any kind of labor that you paid for. And remember, if you paid more than $600 in a year and you did not do W-2 wages, then you should have done a 1099. So be prepared to need to do that at a later point, and probably gonna have a little bit of a penalty. It's not bad though. Materials and supplies, all your back bar costs. So consider that purchases, so this is number 36 is for retail purchases. You paid wholesale and you're going to retail, you're going to mark them up and sell them for retail sales. That's going to go on line 36. 38 is going to be back bar, color, cotton, barrier cream, any of the stuff that you use in the process of doing your job. Every run that you do to the beauty supply, that's going to be here. I'm trying to think if there's any other miscellaneous costs that you might be paying. Nothing right now comes to mind, but if I do think of it, I will jump back here. So ultimately, you're going to total that up. That gives you line 42. And I'm going to just make this stupid simple so you can see. So let's say you have $10 here, which of course is not going to be $10. Let's say you have $5 here. Let's say you have $5 here. That means your total cost of goods sold is going to be $20. Of course, it's probably realistically, so your retail purchasing or your wholesale purchasing for your retail sales, it should be somewhere in the neighborhood of 40 to 50% of your total retail sales, depending on what kind of markup you're doing. The cost of your back bar, this is just good benchmarking here. The cost of your back bar, if you can keep it to anything less than about 8% of your total service dollars, that's ideal. Okay, so then you're going to take, what do we come up with, $20? Totally ridiculous number, but all right, it's entertaining. Okay, cost of goods sold. So on number 40, you're going to put in the number that we came up with down below. Then you are going to subtract that. Yes, see, glad I checked because we have an extra, we have way extra amount of money there. Okay, now we're going to minus 20. So this is called, right here is called your gross profit, or gross income rather, so sorry. No, gross profit. So gross profit is essentially your, hang on, let me write this, 780. So gross profit's going to be your total sales reduced by your cost of goods sold equals your gross profit. Subtract line 4 from line 3, we did that. Other income, ultimately you're probably not going to have any other kind of income. So ultimately you just carry that same line down. Hit me up in the comments if you have a specific question, or I've got all my contact information in there, but if you've got something weird going on here, let me know. Okay, so once you've established what your gross income is or your gross profit, now you're going to come down, you're going to fill in your expense area. Now this is the area that usually is, I'm gonna hope that maybe you have a little accordion folder, maybe you have, use Quicken or even a simple version of QuickBooks, some sort of an online accounting software, maybe use a spreadsheet. Or maybe use envelopes, you know, maybe you put each type of expense into an envelope. So now's where you're going to pull those out. You're going to tally them up, and then they're going to go right here. So these are going to be any expenses that are outside of the ones you already put down in cost of goods sold. Advertising, that's going to be if you purchased business cards, if you purchased any kind of online ads, any kind of print material, anything you purchased to or spent in order for the purpose of promoting your business or getting new business, that's going to be advertising. Car and truck expenses, this is slightly more complicated, and I would have to check on what the current rate is. I've been working from home for a while now, so I haven't taken car and truck expenses, but there's just a number of cents, like it's 12 cents a mile or 13.5 cents a mile or something, I can't remember. And then you multiply that times the number of miles you drove for business only purposes. And you're supposed to have a documentation of that. They have apps for it. You might carry one of those little logbooks in your car, but that's what that's for. And then that would be a multiple. So that would be whatever number of miles you drove exclusively for business times the current straight mileage deduction, because you're not going to be doing enough driving to actually deduct it as the vehicle costs themselves. You're going to just do mileage. You're not going to do depreciation. That's not really an issue. Employee benefits programs. If you have W-2 employees and you pay for them for some sort of benefit, like some kind of health insurance, or maybe you pay their AFLAC or their gym membership, any of that, that's going to go right in this area. Insurance other than health. So that's going to be liability insurance is the primary scenario, which is basically it's a policy that you purchase that protects yourself and usually the salon or the suites, excuse me, from if you have a client that has an accident or something in your place of business. Let's see, other than health. Okay, interest. Interest is going to be if you have maybe a credit card that you use exclusively for business that you pay interest on, or somehow maybe you got a small business loan, and the small business loan you have an interest payment on. So anything that you paid interest on debt that's specifically related to the business. Now, you do not get to write off the actual debt reduction payment. So if you have a credit card and your payment is $150 a month, on the statement it'll be broken out, and actually at the end of the year you would have gotten a statement from, it's actually a 1099 miscellaneous, from your credit card company that'll show you exactly how much interest that you paid that credit card. That interest is a deduction, but the amount that you paid to pay off the debt is not a deduction, because you already took that when you made the purchase. When you went to the beauty supply and bought $200 worth of color, you recorded that as an expense at the time you purchased it. Then you put it on a credit card and paid it off over time. So you don't get to take the payments to the thing. You do get to take the interest. Mortgage, unlikely that you do, but let's say you own, for some reason you own maybe the building that you're in, or you own the space that you're in, and you pay a mortgage on it, obviously that's going to go there. That's a mortgage interest, by the way. Again, same rules, not the principal payment. Legal and professional services, if you pay a CPA, if you pay an attorney for anything, that's all going to go there. Office expenses, so this is where you're going to put, client, what would we call it, like client comfort items. So if you serve wine, or if you, your coffee, your Smart and Final runs, your grocery store runs, toilet paper, that kind of stuff is all going to go into office expense in this scenario for you. Pension and profit sharing, you're not going to have that. I mean, if you do, you shouldn't be doing this yourself. That's all I got to say. Rent or lease. So this is definitely if you pay rent in a salon, rent in a suite, or if you have your own salon and you're paying rent to the, wherever you pay the rent, that's where that's going to be. Now, lease. The possibility of lease could be if you lease, like estheticians, you might be leasing a multifunction machine. So that's going to go here. And the lease is a fully deductible expense rather than a mortgage, which is not, because a mortgage, you actually have an asset at the end. So I don't need to go deeper into that. You can actually look up and leases need to be written a certain way, but usually when you're getting a lease, they're pretty strategic about making sure that it's designed so that you can write it off. Okay. Vehicles, machinery, and equipment. If this makes sense, if you purchased anything that's quite expensive. If you bought a new pair of shears, you know, I mean, you could spend upwards of $1,500, $2,000 on a pair of shears. You know, tools of the trade, you're going to put right in here. But it's going to be hard tools. It's not consumable. So it's not like color and stuff that you're actually going to use up to provide the service. It's only going to be the things that you keep for time. Other business property, that's not really a thing for us. Repairs and maintenance. Okay, so sharpening your shears, you know, getting your sink fixed, getting the chairs reupholstered, computer repairs, you know, any of that stuff, that all goes into repairs and maintenance. Supplies. Okay, so supplies not included in part 3. Part 3, if you remember, is the cost of goods sold area. So that's where this is going to be. So you have a choice. Office expenses, you could make it just straight like printer ink and pens and pencils and paper for your printer, whatever. That could be office expense. Then your client comfort items or the supplies that you have, you know, the candles that you need to burn because you're, you know, you're doing your massages, or maybe it's oil, or maybe it's, you know, so that's going to go into, sorry, take back on the oil, because the oil is going to go up in your cost of goods sold. But, you know, the toilet papers and the wine and the, you know, client snacks and, you know, whatnot, that's going to go into this area. If you didn't already put it into office expense, it can kind of go in either place, but you can't go in both. Taxes and licenses, when you do any of your licensing renewals, if you received any fines, that's going to go there. Any additional licenses that are required that cost you any money, go there. Taxes, it's not the same thing as any of your personal income taxes. It's not, it would be sales tax. That could be, no, that's going to be a whole separate form. So that's not it. That's going to be so scratch everything I just said about sales tax. It's not sales tax at all. So this is just if for some reason you had to pay like to your local government a tax or a fee or a licensing agreement or something, that's going to be there. Travel and meals. Okay, so they've gotten kind of sticky about the whole travel and meals thing. What they're doing is they're doing travel. So travel would be the airfare to go to a show, the hotel that you stayed in, you know, the car you had to rent, the parking tolls you might have had to pay, that's going to go travel. Meals is going to be, you can no longer put meals that you ate while on the road. You can put them, but they're going to be, you're going to get a 50% deduction. So that's what you're going to put. If you meals that you ate while you were on the road, go right here in this deductible meals area. And the travel is going to be, like I said, any of the actual transportation of yourself to wherever you were going for a work-related event. Utilities, if you pay for, this is where you're going to put, you know, if you do pay any air conditioning, maybe you do a shared situation in the salon you're in, maybe you do suites and you're responsible for it, unlikely, but there might be some utilities in there. Wages, so if you had payroll, like actual payroll, that's going to go here. Other expenses from line 48. Okay, what that is they're giving you a little bit of room if you have some weird miscellaneous stuff. So right down here. So I noticed they don't have an area for like telephone. So maybe it's telephone. Dues and subscriptions, you know, magazines that you have to have in the space for clients. You can get the picture. So here's the bottom line. If you have expenses that don't make sense in any of this part 2 area, then you come down to part 5, list them specifically, and you can see you can actually type right in, and then you put the amount. Blah, 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 blah. Okay, you get the gist. Then you total that down here. And then you take line 48 and you bring it back up here. And you add it in. Other expenses from line 48. Okay, you got that. That's a gibberish number. That's not the same, but it should be the same. So whatever's on line 48, you carry up here. Now, total expenses before business use of home are line 8 through 27. So now you're going to just total all of these, boom, 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 all the way down through other expenses, and that's going to go here. So everything that you put in line 8, 9, 10, 11, 12, blah, 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 all the way down, added to the stuff that you have from section 5, total goes here. Then you're going to take that and subtract it. So you're going to take your gross profit and you're going to subtract your total expenses. So let's put in a real number here so that you can, at some point you can, okay, and take whatever. Okay, so you're probably going to have something in office expenses, probably not going to have something there. Definitely will have something in the rent or lease area. It's not going to be vehicle, machinery, and equipment. It's going to go here. Okay, repairs and maintenance, yes. Supplies, yes, you'll have something there. Taxes and license, you have something there. Travel, because of course you love to go to shows and you are deeply committed to your education and being a true professional. That's my little lecture. Or my soapbox, I guess. Okay, deductible meals, see instructions. You did eat some meals while you were in Vegas because the food is fantastic. Utilities, it's unlikely that you have utilities, but if you are a salon owner, then yeah, you will definitely have utilities. Okay, wages, that's if you were paying someone actual W-2. Other expenses is going to be everything that you brought up from down below. So let's see if we're going to fake this out a little bit. 6, and then let's see, what's another towels? Let's do that one. This is a little bit wacky on the proportion, but that's right. Okay, so so then your total down here. So you remember you would have done this before. Your total down here is going to be 10. Now you're going to carry that 10 with, like you would have already, not now, you would have already carried that up to here. So this is a 10. So now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 plus 10 is 24. Total expenses. So we have 24. And then we are going to subtract the total that you came up with here for your expenses from your gross profit, which brings you to obviously ridiculous numbers, but I'm just saying. Okay, 10 of profit or less here. 99756 is a pretty unlikely scenario, but I know a lot of us do it. It's it's not unlikely. It's just gray. It's a very gray zone. What I understand is that for some reason the whole business use of home thing has become a bit of a red flag. So my opinion on this would be, if you always do it every year, then you should probably do it this year. If you don't do it this year. That's what I would say, because you definitely don't want to do anything that's going to bring anything, you know, red flag any of your stuff. And you don't want to increase your expenses more than you legitimately should, because you want to actually come up with a pretty decent bottom line. Okay, so if you're not doing anything here, then your net profit or loss is going to essentially, you're right here, so subtract by 30 from 29. So if this is a 0, then this becomes the same number, 99756. So this line here becomes this line here if you're not subtracting anything out of there. Sorry, this would be here. Okay. So then this becomes your net profit or loss. Wait, I'm missing a line here. Method where should, oh, so this would be the business use of home number, sorry. Okay. So we're going to say that's a 0, but then here you get the 99756. Now, keep in mind that obviously we didn't hardly give you any expenses here. So if you grossed 100,000 in services or in total revenue, you know, I would hope that this number here is something like 40 to 50, would be very normal. It could be higher than that if you're serious about watching your expenses, but then your taxes are higher. It also could very easily be more like 12 or 13 because you're used to trumping up your expenses. So consider that. I can do buttloads of videos on cost management, and I will. This is something that I realize we just need desperately. Okay, blah, 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 blah. So all investment is at a risk. Okay, so we're not talking about investment here. So ultimately, this is the number that you need for doing this PPP loan. Then you take that number, okay, you divide that by 12 months. So that means that your payroll, according to the Payroll Protection Program, is equivalent to $8,313 a month. And then you're going to multiply that times 2.5, not 25, 8313 times 2.5. So you're at, oh, this is why I don't like using my phone. I use an adding machine, but it's 9 o'clock at night and I'm not doing that. Okay, so you would be eligible for $20,782.50 on a PPP loan if these were your numbers. Let's be real, most of the time it's not that high. But even if your numbers look like, you know, you've got to be living, so you know that you're probably somewhere in the neighborhood of 1,500 to 5,000. Like those are really realistic hairdresser numbers, or I should say service industry technician numbers for the beauty industry. Now, this can easily apply to anybody who's not in the beauty industry. I just really wanted to do it and be specific so that if you're an independent hairdresser, a small salon owner, maybe you work in a salon and you're considered an employee, but you get paid a 1099, that's still, you're technically not an employee, and then you can do this sole proprietor form. So essentially, whatever you end up with in line 31, this one right here, whatever you end up with there, then you get to divide that by 12 and then multiply that number times 2.5 times, because that's the equivalent of 2.5 times your monthly payroll. Okay, so the next piece, you take that number. So once you've already, so keep that number in mind. Cabbage is an example. There's a whole lot of options out there that are third-party brokers that will shop multiple banks for you, which is what I recommend you do at this point. And this is a really nice, clean operation. Actually, I'm going to go ahead and stop right here because this is going to be too long. I'll do a separate one that will be how to fill out the loan itself. Okay. Alrighty. I hope that was helpful. And hit me up if you have questions. Ultimately, you need to get this done, like no joke, in the next 24 to 48 hours. I would really recommend if you can do it first thing in the morning, please do. Okay. Good luck.